This crypto token has had an insane pump, and FTX plans to dump certain tokens. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Last week, we covered how Genesis Trading and the crypto exchange Gemini, who were fighting over $900 million, were now being sued by the SEC for selling unregistered securities. It now seems like Genesis Trading, the subsidiary of Digital Currency Group, will be filing for Chapter 11 bankruptcy in the coming week. According to AP Abacus on Twitter, who has been following the case very carefully over the last few weeks, Genesis Trading is preparing to file for Chapter 11 no later than early next week, but likely by the end of this week. At the same time, Digital Currency Group is doing all it can to protect the DCG brand name, which is a massive name in the crypto industry, even if it means sacrificing a portfolio company and its creditors. As the story continues to come out, we'll keep you posted with more details, so subscribe to stay up to date. Ethereum-based Layer 2 scaling protocols Optimism and Arbitrum have seen a sharp divergence in transaction activity over the past month, with Optimism outpacing Arbitrum since December. Both protocols had been on a steady upward trend since the beginning of 2022, but this is the first time Optimism has significantly outperformed Arbitrum. Last week, the ecosystem logged over 800,000 transactions in a single day, a figure that marked nearly 2 times the network activity seen in November and over 10 times since last June. The increased transactions on Optimism have occurred as its token has been one of the top performers across Layer 1 and Layer 2 protocols. Arbitrum doesn't have its own token, and market participants may be looking for new ways to gain exposure to Ethereum, as liquid staking derivatives such as Lido and Rocketpool have also been performing well. The Optimism transaction gains have also occurred as the decentralized perpetual futures exchange GMX, which is built on Arbitrum, saw a 30% drop in use since December 10th. Synthetics, a separate perpetual exchange built on Optimism, saw an increase in volume starting around December 20th. The total value locked on Optimism holds just under 600 million, with popular trading protocol Synthetics accounting for 18% of all its TVL. Synthetics allows traders to bet on financial derivatives without relying on third-party trading and clearing systems, giving it a niche user market looking to invest in global assets such as equities at low fees. The new management of the bankrupt FTX exchange has identified $5.5 billion in assets that can be used to repay creditors, sparking fears of a large swath of crypto assets that could be dumped on the markets. On January 17th, FTX debtors identified $3.5 billion in crypto assets, with $1.6 billion associated with the bankrupt exchange. The best-known holdings are Solana's SOL and FTX's exchange token FTT, along with liquid assets including XRP, Doge, Aptos, Polygon, and BitDAO. However, liquidators valued the token at the time of the bankruptcy petition. Adam Cochran on Twitter commented, "So liquidators were counting token prices on the day of filing and consider the 529 million of FTT to be liquid in this calculation, as well as 685 million of Solana, which would mega nuke the SOL market. You maybe get some of the value out of Bitcoin and ETH, and you'll get the stables. Everything else is going to tank the price if you sell it. So you're looking at 600 million on 10 billion plus at best, or 6 cents on the dollar." Shark Tank investor Kevin O'Leary says unregulated crypto exchanges will continue to fall like dominoes post-FTX, plenty more meltdowns to come. The former spokesperson and proponent for the now bankrupt FTX exchange said, "If you're asking me if there's going to be another meltdown to zero, absolutely. 100% it'll happen, and it'll keep happening over and over and over again." He goes on to say, "If you're not willing to be audited, you don't have an audit, you don't want to be transparent, you don't want to disclose ownership, why should institutional capital stay? Of course it's not going to." Unregulated exchanges are those that aren't subject to regular auditing, aren't registered and regulated by Securities Commission, and don't operate under rules similar to traditional stock exchanges and brokerages. Some of the auditors, such as Mazars, have seemingly backflipped in their support for crypto companies. In December, the company removed its audit for crypto exchange Binance and reportedly stopped doing proof of reserve audits for crypto companies altogether. Other auditing firms, such as FTX's auditor Armanino, have reportedly stopped working with crypto exchanges like OKX and Gate.io. O'Leary commented, "Frankly, you know it's very hard to find an auditor that wants to touch this stuff right now because of the unregulated cowboy environment. It's all going to end, and yes, there will be many zeros." Polygon, a layer 2 scaling solution, has successfully completed the hard fork designed to reduce instances of spiking gas fees and disruptive chain reorganizations, known as reorgs. The software upgrade occurred yesterday morning, taking on the two proposals that were put forth in December. The first proposal adjusted a mechanism that sets gas fees. The new mechanism aims to keep gas prices low when there's a lot of activity on the network. The second proposal aims to reduce the amount of time it takes to complete a data block, part of an effort to prevent frequent reorgs, which occurs when a validator node receives information that temporarily creates a new version of the blockchain. Polygon NFT avatars on Reddit also reached 6 million unique holders on their platform, one of the biggest adoptions of NFTs so far. Major crypto exchange Binance announced the listing of RPL, the native token of the decentralized Ethereum liquid staking provider Rocketpool. When announced, Rocketpool had a massive rally and at one point was up more than 50%. It's also important to note that Rocketpool will be listed on the innovation zone of the exchange, and trading will be open starting today. The Rocketpool token is directly involved in Rocketpool's operation. Rocketpool's node operators use the native token as insurance collateral. In addition, Rocketpool is used to fund one of the two decentralized autonomous organizations that run the protocol. Liquid staking derivatives like Lido and Rocketpool have been rallying hard the last few weeks as Ethereum devs are rolling up their sleeves ahead of a key major upgrade to the network, Shanghai. Lido Finance currently sits at the top of the liquid staking platforms with almost 75% of the market share and 4.87 million ETH staked. Coinbase is second with 1 million ETH and 15% share, and Rocketpool sits at number 3 with 5% share. But even though Rocketpool is at number 3, it's far more decentralized than Lido. Lido has over 150,000 ST ETH holders and only 29 node operators. Meanwhile, Rocketpool, with a much smaller percentage of the network, has over 1,900 node operators. Of the 16 million ETH currently staked, liquid staking makes up about 40% of the staked market. Lido is currently in the lead, but which liquid staking protocol do you guys think will be the winner when the Shanghai upgrade comes around? Hype is mounting over the latest project to launch on the Cardano ecosystem. Djed is a crypto-backed, over-collateralized algorithmic stablecoin that is backed by ADA. It's been developed by Cardano backers IOG and powered by Coti, a layer 1 scalable enterprise network. Djed is planned for release this month, however no date has been specified just yet. Djed is entering a crowded stablecoin market that already accounts for 13% of the entire crypto market cap and almost a third of the top 10 assets. Djed uses a similar formula to existing stablecoins such as Frax. It uses collateral from ADA and a reserve coin called Shen, minted and burnt to preserve the dollar peg of Djed. ADA is sent to the Djed smart contract in return for Djed. Furthermore, Shen acts as the balance when ADA price fluctuates. Unlike Frax, which is fractionally collateralized with USDC and FXS, Djed will be over-collateralized with ADA at 400 to 800%. The launch will likely boost the total value locked on the Cardano ecosystem and potentially ADA prices. Cardano DeFi total value locked has already been on a tear this year. It's currently just shy of 75 million, following a 50% rise since the beginning of 2023. Cardano DeFi TVL is now at its highest level since early October, according to DeFi Llama. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.